All right, guys, let's walk through my backdoor Roth IRA step by step with Vanguard. So, for anybody watching, this is a high income earner type of deal where you can't do direct to Roth IRA, but you still want to invest in a Roth IRA. So, therefore, what you have to do is call it a backdoor Roth IRA. So, there's extra steps. In short, all you're doing is contributing to a pre-tax IRA, like a rollover in my situation because I have it open, or a traditional IRA. Then you're converting it over to a Roth IRA. And what you want to do is file form 8606, okay? So the reason we didn't do this earlier in the year, typically we do it on the first of the year or the first business day of the year, was because of our situation in 2025 was absolutely insane. On the back half of 2024, we lost our house. That basically, in short, with that plus medical needs that my daughter had, amounted to roughly like $400,000 cash. So there was a major rush of need for like other things and other priority. So therefore this stuff took a back seat. And that's why it's May 2nd and I'm doing this. However, typically I would do it in the first of the year, and I will do it the first of the year next year. And having that money prepared, ready to go is going to be key. Now, there are a lot of considerations here. Okay. So the first thing is the step-by-step process. This is with Vanguard in particular. So if you're like Fidelity or Charles Schwab or somebody else, this won't look exactly the same. However, the concept will be identical. So this is for high income earners. If you're single, it's roughly, let's call it modified adjusted gross income over 151,000. If you're married, filing jointly, that is modified adjusted gross income over 246,000. There are phase out limits up until those amounts, about 10,000 each, 10 to 15,000 each. But overall, generally speaking, those are the numbers. If you're, and this is modified adjusted gross income. So this isn't your gross income or your AGI. This is modified adjusted gross income. That's a very key distinction. Okay. If you need to learn how to calculate that, just reach out and I'll send you the calculation of how to get to that. But with that being said, okay, so this is the first step. So the first step is we got to go into our pre-tax IRA of some sort. So it's either rollover or traditional. In my situation, we had a rollover from previous rollovers, so I kept it open and it just sits there with $0 the whole year, okay? So I go in there, as you can see, it says $0. I hit transact right up here on the far right and I click contribute to IRA, step number 1. Okay, number 2, and again, this is just step by step. I want to show you the actual screenshots. This is going to pull up and it's going to, ask you, where's this money going to come from? How much do you want to put in? And I put $7,000, obviously, because in 2025, that's the max that you can put into your IRA. And so it will tell you right here, what is your max? What do you can contribute, et cetera, et cetera. So I'll put $7,000. I'll hit continue. I'll put my bank account, just the drop down that's already connected, and boom, that money comes into the account. So you just hit accept right here once the next screen comes up. And then the following screen, it's going to kind of send a summary. What are you buying? Which fund it is? It's going to be the money market fund because you don't want to invest this money at this point in time. And then it's going to say within 2 business days, this is going to be fully through. Which I did this past Tuesday or Wednesday, and then it came through on Friday. So then I click submit. Boom, that's done. And then number 5 is I will then want to go into get that money. That money's in there. Finally, funds available to trade. The money market fund is here. I'm going to go in and click convert to Roth IRA. But again, you need money into the actual settlement fund to be able to move it over. So right here, what I did is I started this. This is the big button I refer to all the time, convert to Roth IRA. But this federal money market fund, when I took a screenshot, had $0 in there. So it says the funds available to trade, but you can't actually move that money over quite yet. But I just took the screenshot. And that's why this says unavailable shares here as well. So just a heads up there, it will say $7,000 in the account up here, but it's not technically in your money market. It does take 2 business days like the last screenshot said. And then number 6 is you will then click this button, start my Roth conversion. Once you click the big convert to Roth IRA button, pretty simple. Number 7, just make sure you're paying attention to this, the checklist, but basically just hit continue here. Number 8 would be, I agree. Nothing crazy. Proceed without withholding taxes. I mean, in short, this is an important thing to understand because you don't want to. I'll keep it short. Just click I agree. Number 9. Okay, so number 9 is when the actual fund VMFXX, the money market fund, does have the $7,000 in it. So this is what I did this morning. Now it's going to pop up and it's going to show you your two IRAs. So Aaron and I obviously were married, so it's going to show both. But if I'm doing a rollover from my account, I want to make sure I focus on mine first and then hers second. So make sure you don't like get them screwed up. It's going to be hard to mess them up because it's going to find the equivalent Roth IRA under the person's individual's name. So right here, we're going to start with mine first. And we obviously have the money in there, $7,000. We hit continue, pretty simple. And then number 10, we go to convert all the account. I would assume you're going to convert all the account. I would. The problem becomes if you keep money back into the traditional or pre-tax, you have potential for pro rata issues. So I would convert obviously the whole account. I don't know why you wouldn't. Maybe there's a situation where you have like tons of other money in there from previous years. That's a whole different conversation. But if you're just solely doing the 7,000 or just the yearly maximum, just do convert all the account, not some of the funds. So pretty simple step there. Number 11 is then it will pop up and it will say basically choose which account you're converting your funds to. It's going to find your specific account. Like I said, like do yours first and then your wife's second or whatever the case is. And then so Roth IRA here finds my account, boom, account number, and then just click continue. Pretty simple. If for whatever reason it finds something goofy, like it shouldn't, but like I would call the customer service. This is preference for tax withholding notice. I don't care to see that personally, but the IRS requires them to offer this essentially. So you can send it to your email, you can send it to your US address, whatever you want personally. I just don't care. So I hit continue personally. Number 13, almost done, guys. Like I said, this is a super simple process. So now it's going to kind of give you a review of what's happened. So your specific account converting from that rollover, that traditional or pre-tax IRA, and it's going to show you the amount. It's going to show you where these funds are held. It should be a federal money market fund because that's a cash equivalent. And then it's going to say where it's converting to, the Roth IRA that you obviously want to do the backdoor to. And then the tax withholding notice, do not send, hit submit. And then 14. So now this is where you actually have the money over. So this is interesting. So when I showed you before, I said you have to have 7,000 in this money market fund in order to be able to convert the money over. Now in this situation, now this is in my Roth IRA, as you notice up here. So it's in my Roth IRA. The $7,000 bumped my balance up to 195. So I know it's already in the account. And you can see funds available to trade. It will show 7,000. Available balance 7,000, but it will show $0 obviously in here at this point in time. But you can go up here, click transact, and click on trade Vanguard ETFs because then at that point you can then invest this money. So it's very important when you first put your money into the rollover, you don't want to do any of that. You don't want to set that up to be invested. You want to keep that in the VMFXX. Once you transfer it, you have to go in here and invest that money. So number 15. As you can see here, it brings up the next screen. Now, this is an example. This is not my investment buy that I made today. I want to show you an example. So what the screen looks like, it's going to pop up a Roth IRA brokerage account with your specific account number. It's going to say funds available to trade, your $7,000 or yearly maximum. And then what it's going to ask is like, which ticker do you want to buy? So I did VTI as an example. Again, example. This is not what I did today. This is not the $7,000 buy I did, but I want to show you because initially you're going to click buy. And then it's going to ask you shares or dollars. I would always do dollars because shares gets complicated. There's no reason to do that because it would translate to estimated shares down here, 25.168. And so that $7,000, you just want to make sure the full amount goes in there. And then you would go down here and click submit. Now, here's the other thing. If in like my situation, for example, I did not just do VTI. VTI was one of my buys, but it was not all of my buys. So I had to basically do a manual calculation to figure out what my distribution was. So in our situation, I do a 3-fund split. So my 3-fund split, I made sure I took the $7,000 times the equal percentages to make sure I knew the dollar amount for each one. And then I went in and did this 3 times specifically. So I bought VTI, then I bought my other funds as well. And I made sure I get the exact dollar amount so that when I went back to my account, I would check the funds available to trade and it would be $0. Make sure you get that on the money to the penny. That's important. But again, pretty simple to do. It's pretty hard to mess up. So guys, this is a process of the backdoor IRA. It's really easy to do. It's not hard, but it's a matter of understanding a few things. The pro rata rule so that you don't leave money in that pre-tax IRA. Or when you go to do this, you don't have other money out there in other rollovers. Like you might have other rollover IRAs at other brokerages. Like you have to account for everything. You do not want money in there because that's what's called the pro rata rule. I'll put in the top right hand corner the pro rata rule video to explain it, to break it down, show you the math behind it. But in short, you don't want that. So that is a big consideration behind doing this. And then secondly is when you put your money in, you don't invest it in the pre-tax, but when you move it over to the Roth, you do invest it. So those two things are big misses for a lot of people. Other than that, guys, it's just a bunch of technical steps I just showed you guys, and hopefully this helps tremendously, and it's super easy. But that's it. So I officially did my backdoor Roth IRA, and I did my wife's as well. I didn't show you guys that, but we did both. I did both of these today. And so May 2nd, obviously, what I do is I set a reminder every single first of the year to make sure I knock this out first thing. The other last thing to consider potentially here is like the $7,000 is a lot for some people. I would argue for high income earners, it's not as much. And those are the individuals that are doing this. So what you don't want to do is save up a bunch of money all year to do this, because then you just have money out of pocket, or you have money sitting in cash all year. You want to make sure you can basically fund this in a very quick rate. Like we did this within a month, essentially, once we were ready to go. So make sure you don't have you're sitting in cash for multiple months saving up for this one time a year type of purchase, because that doesn't really make a whole lot of sense, because you're leaving the money out of the market. So just a heads up there, and hopefully this helps, guys. Ask questions if you have in the show notes below, and we will talk soon.